Hi guys, so welcome to one of the introductory videos of our series. This video is coming to you from Sami FX. I'll be giving a series of training on the basics of forex trading. However, I recommend that you start from as a beginner. If you don't have any idea whatsoever on what trading is, I'll suggest you start by going through the platform babypips.com, so that you get the basics of knowing what a pip is and all that. So for today, I'll be showing you guys how I analyze a pair. So I'll look for a pair that I've not analyzed in the past and show you how I approach the market. I think I've not. Okay. I'm looking for a clear chart that we can just start from. Just give me a second, guys. Let's see. Oh, fine. Let's just analyze this odd NZD. My analysis process is the same for all the pairs that I trade, so it has nothing to do with the pair type. But I prefer to trade GBP pairs. Mostly GBP pairs, that's what I usually trade, and then a few pair here and there. But then again, trading is trading. You can decide on whatever pair you want to trade, and that's just, it's up to you. So I'll start by analyzing a clear chart of this odd NZD. So basically my charts are black because that's how I learned from one of my mentors. So I prefer to have black chart. Normally what you see on the chart will be, for most traders, what you see on their chart will be green and red candlesticks. But my candlesticks are black because that's how I've been trading, and I feel like it's okay for me that way. I'm a minimalist per se, so I like simple colors. I don't like too many colors. So what I do when I approach a particular trade, before I start, I analyze from, there's what they call top-down analysis. So as you can see, I'm on the monthly time frame. So there are a couple of different time frames where you can look at the market from, look at the charts from. So I'm actually on TradingView platform, for those of you that don't know. So we start from the monthly time frame, and I'm trying to identify all the key supports and resistance. As you can see, I've already spotted one of the supports here. So basically the floors of every market is like the supports, then the tops, the roof, or how they call it, is the roofs are like the resistance. But this video is just a brief overview. We might not go into details like that. So we've scrolled back a bit. You don't need to go back to 1988, so those times I believe is not really relevant. But from the general perspective of the market, you can just take the most recent. Let's say I prefer to analyze the monthly the way it is, but I think 5 years back is okay to start. So this is the rectangle that I've placed there, which signifies the support. So there is another support here. As you can see, it's snapped exactly to that support. Remember, this is the monthly time frame, so between here and here is like almost 5,000 pips. So it's really huge. Is it 5,000? Yes, from here to here is 5,000 pips. So don't think that these small spaces are small. They are not small at all. They are not small. Yeah. So we will look for the next support or resistance as depending on your perspective, but I'm just marking out all these key levels. Yeah, so this is another key level that we have spotted here. It might not be too accurate yet because you're coming from a higher time frame. Later we'll go down to other smaller time frames to look for a more fine-tuned position. So there is another one here. As you can see, there are several touches here, 1 2 3. This could be seen as belonging to this other side, somewhere here. Yes, so 1 2 3 4 5, multiple touches on this level. Another level is here. So the market is still down here. You can decide to stop now and have a deep dive into lower time frames, but for now we can continue marking up key levels up to like let's say, okay, there's another level here, there's another level here. I'm looking at the previous data points. That's what I'm actually checking. There's a level here because as you can see, the market reversed from this point, and then there was a support here and it was a resistance here. So most times when a support is broken, in the future it might become a resistance, and as the case may be, vice versa. So let's just take one or two final levels, nothing crazy. So there's another level here. So you don't have to acknowledge all the levels, but you can use your eye to just decide on the key levels that you want to acknowledge in the market, because the purpose is when the market gets to those levels, you should be expecting a kind of a reaction, you understand, and you should be getting ready to join in, maybe for a sell or a buy. So as you can see, this is what we've successfully marked out so far, and it's going to take months for the market to get to this level. So one of the good things about doing this thing and doing it right is, once you're able to mark up your charts properly, you can use this same markup for a very long time. Like you can use it for months on end, and it's your chart. You marked it up for like throughout this year. As you can see, imagine I had marked up this chart from 2015. I'll still be using the same markup in 2023. That's like how many years? Almost 8 years. So when you focus on getting this right, once you get it right, you can use it for a long time. You just adjust this along the line, and that's all. So now we are on the monthly, but you don't take trades from the monthly, so we are dropping down to the weekly. So as you can see, it's a bit it's not really smooth along the weekly, but you see one of the levels, the market have respected one of the levels already. So imagine you are here, you would have joined in for a buy, but that's just one of the confluences on the weekly. So we should expect that a lot of manipulations do happen along these levels. As you can see, this place, the market respected this level to a T. You understand? The market respected this level to a T. But here you can see that it violated the level for a bit and touched this previous level. You understand? Before coming back up and then retesting this level and then proceeding. So this is the weekly, and these are like a whole lot of pips. From here, this is 605 to somewhere here. That's like that's almost 800 pips. This small move, and imagine you're on 0.01 or you're even on 0.1. That's a lot of money. So now we are going to zoom in again on the weekly. We are trying to understand where this market is currently and what to do about it. So you can see that there is a smaller level here that this market reversed from. So you can choose to acknowledge that level, but you make this other triangle to be smaller. It's just a level that the market respected. The market respected it here, and somewhere here, and then here and here. As you can see, the market is already respecting it, and hopefully it might pull to the upside. Now, another important concept that you must take note of is the trend line. The trend lines are very important because it shows the direction of the market and gives you a guide of where the market is expected to react or break out from. So if you've drawn a trend line like this is an uptrending line. Let me box it properly so that it forms what they call a channel, a trading channel. So these are important concepts. They might not be exactly beginner friendly, but these are like the fundamentals of how almost everybody trades. So you can see that this channel has been formed. So that means if I drop down to the daily time frame, let's scroll back. This is like a market in the past. You see that once this market got up to this channel, I can start buying the market. You understand? And remember, on a daily, this was a double bottom. These are key reversal patterns. So the market failed to break here, came back, failed to break the same place, which gives us a strong indication that the market is about to reverse to the upside. Now, as you can see, this market will get to the top of the channel, comes back, and then it keeps moving on the uptrend. Anytime it touches this bottom trend line of the channel, that means we should be expecting a buy with our stop loss placed slightly below it, so so that in case it breaks. I remember what I told you guys in the first video, that once you anticipate or speculate that a market will move in a particular direction, it is not cast in stone. The market might decide to go in another direction. So now another important concept about channels is anytime there is a breakout from a channel, I see a breakout and a retest. Remember, this is from the daily time frame, so this market has been selling for days, almost months, like from 2021 to about October 2022. It has been in an uptrend. So when it broke out of this channel and retested, remember, see one of our key levels, that means you go to this key level and reversed. So anytime it gets to a key level, remember what I said, you should be preparing to get into the trade pending different confirmations, which I'll be explaining some of the market reversal patterns that we should be looking out for, and continuation patterns that we should be looking out for. Like as you can see, this is a shooting star on a daily. This is a strong indication that this market is being rejected by sellers. There are a lot of sellers up here, that's why you see this strong weak rejection. And then there's a break of structure, because this was a high and then this was a low, and then this was a lower high. It didn't break the former high, so this is a change of character. Now as you can see, the market broke out of this channel, so their buys are not expected again, because the channel has been violated. So you wait for a retest at the channel, and then you enter for a sell. But if you want to be an aggressive trader, you can start your sales from the top of this channel and expecting to take profit somewhere here. You understand? So this forms another channel. I'm coming to the present market, but there are a lot of ways you can use this channel concept, and it's really profitable for people that know how to use it very well, and the same people that have the patience to follow it and use it. As you can see, there's another channel here that has been formed. So there was a breakout and a retest. It broke out and retested with a shooting star, which signifies a lot of buyers here. There's a rejection, and remember, this was one of our key levels. And as you can see, you can enter for a buy now, put your stop loss slightly below this level and channel, and then you have a good listing up to the next resistance level. So that is just basically how we trade. Like as you can see, there is another slight buy opportunity forming even on the present market. How will I put it? On the present markets that we are looking at, you can see that there is a slight buy opportunity. Guys, remember, this is a daily time frame, so you have to know that most of these positions you're seeing are really huge. They represent hundreds of pips. So as you can see, there's a big bullish engulfing candle here, which shows that this level has been violated. So you either wait for a retest of this level to this point, which is a 1.0988. Any point from here that shows a confirmation with a rejection of this level, you can get in for the buy. So most times you can still drop down to the 4-hour time frame. As you can see, this market respected this lower channel and entered for a buy. But for a more conservative trader, you can still wait for the market to drop to this particular point here and give you a strong rejection candle, maybe a bullish engulfing or a shooting star. So once it is here, then you can put your stop loss slightly below this level, and then going for a buy to the upside, maybe targeting this other 1.14 level. So basically, this is how we trade. And another important thing that we apply during our trading, as you can see, this is a clear violation of this level. Look at this bullish engulfing candle on the H4. This candle is worth 574 to 698. That's almost 120 pip candle on a H4. So if a candle is moving, H4 is giving you 120 pips, just a single candle. So you should know that this is a clear indication that buyers have taken over in this market, and it's ready for a bullish run. So as you can see, this is what this market has done. It has gotten from level to level. So this is how we pick out our trades. I don't know what else I'm missing. I think this should form the foundation of our first analysis. Okay, you enter your trades. You enter your trades on the let's say 1 hour or 30 minutes or 15 minutes, as the case may be. Because if you try to enter your trade on the So yeah, as I was saying, sorry, I had to take a call, a very important call. So we take trades from the lower time frame, maybe 1 hour, 30 minutes, 15 minutes. That's where we make our entries. But we look at direction from the higher time frame. As you can see, this is not a very good entry position. It's not really, like, you can still enter for a buy here, but the market might still come down about 200 pips from this point to this level before even moving forward, and that's like risky. So that's why when you're talking about risk management, money management, you have to be patient for this market to drop back to your area of value. You don't chase the market, you wait for it to come down to your area of value, which is somewhere here, so you can have a good entry or a better entry of about 50 pips stop loss, targeting maybe 200, 300 pips, or as the case may be, and you can just throw your trades up to the target. So that's just basically how we analyze our trades and enter. So for GBP USD, these are like my pairs. As you can see, I call them my pairs, but there has been a lot of market manipulation in the past days, which is like a constant in trading. Like I feel like everybody can understand market structure and price action, but it is the manipulation and the stop loss hunts that actually throw a lot of traders off. You understand? You might understand that, okay, we've gotten to a key level, the market is supposed to do this or it's supposed to do that, but you might get to that key level and all these market movers, they know what you're expecting, so they are there waiting for you to place your stop loss, and they'll just come get it, and then the market will not eventually move in the direction you wanted. So that's just basically how we approach the market. Most other traders, they call this top-down analysis. Sorry, I think my mouse is misbehaving. So they call this top-down analysis. As you can see, we are actually at a key level, and a rejection is about to be formed. A rejection is starting to be formed on the daily. So you drop down to your H4. So as you can see from your H4, there is actually a shooting star. So I can actually, in my first video, I said there's no right or wrong. The most important thing in trading is risk management. I can comfortably take this trade for a sell, because my stop loss will be very small and minimal. So my stop loss here will be less than the market is currently at 794. So my stop loss will be like 30 pips. So I'm cool with losing 30 pips with the potential of having this market drop down back to this level. So for me, I'll enter this trade for a sell. That is not the only confirmation I do take. I really do wait for, like, if I go to the lower time frames, I might wait for my moving averages to cross over. So I'll just probably wait for this moving average to cross over, maybe on the 30 minutes or the one. So once there's a moving average crossover and maybe a lower high, I might enter this market for a sell, because it's at a key resistance level, and it has even overshot this channel outside. So these are like examples of the manipulation we are talking about. This is the top of the channel. The market was supposed to come down and then continue, but now it just overshot the top of our channel and continued to God knows where. So that's just the market for you. It doesn't respect you, it doesn't know you, it doesn't care about you, it doesn't give an F about you. You just have to trade with what you're seeing, and hopefully you make some good profits. So guys, that's just it. A sell is highly possible here, but again, it's not a risky trade. So maximum stop loss might be 50 pips, and then you're targeting these lows and trailing it down to this low. So again, that's just what trading is all about. You're looking for tiny stop loss, big reward, tiny stop loss, big reward. That's just the summary of trading. You're looking for trades that are in a downtrend, you're looking for a way to join it down. Trades that are in an uptrend, you're looking for a way to join them up and then targeting the higher level. So that's just it. I have stopped trading gold because gold is a very mad person, but he can decide to do whatever he wants. But this is actually my markup for gold and how we follow it up. You can see there's a double bottom here, and then the buy started. There's a double top here, and then the sell started, and then now I think this is more like a consolidation. It's consolidating, probably to get to this level and sell, or it might break this level, retest, and continue to the top side. Nobody knows. That is trading for you. All right, guys, thank you. This is how this is where we'll call it a day. 20 minutes is kind of very long, but this is just how we approach the market. Thank you, guys.